Hi, it's Denise Graves with the Graves Group. I get asked all the time, is it still a good time to buy a house? So I'm wondering, you just heard today that the Fed raised the basis by 75 basis points again today, and everybody goes, ah! So what does that mean? Well, a basis point, to put it in perspective, is 1/100th of 1%. Yeah, kind of sort of gets into perspective. So what did it do to interest rates? It took us from 5 3/4 or 5.34 to 5.54. Not a lot of change. It sounds scary when you hear 75 basis points, but reality is rates haven't changed that much in the last 4 or 5 weeks since the Fed's been raising rates. So what's happening? We supposedly have a recession. Texas is not really feeling that much. See higher gas prices. We see rates going up. The good news for buyers is we're seeing more inventory because that rush where prices were at all-time highs, up 34% the last 2 years, has really cooled off a little bit. That doesn't mean prices are going down, but it does mean there's more inventory on the market, so you as a buyer have a better chance of shopping, making an offer, and getting an offer accepted. Now, some of us are a little freaked out maybe by the rising rates and say, how does that affect me as far as qualifying? Well, there's a few things that you can do to really help your chances of still getting the house you want, even with a little bit higher rates. I do want to put in perspective though, rates. This is the first time we've seen this much of a raise in rates since like 1994, but interest rates in were over 8%. So count yourself lucky. I always say if it's a rate less than 8%, it's a great rate, which is unbelievable when you're talking about 3% rates we've had the last few years. So don't get caught up in that because there's a lot of things you can do. The one thing you can do is talk to your mortgage officer and work on your credit rating. People with great credit ratings, 750, 750, and 800, if anybody would ever get that, then you're going to get the best rates, the best deals, the things that the loan officers kind of hold for those choice loans. The better your credit rating, the better your rate is. A second thing you can do is look at some unusual, creative ways to do financing. So make sure you've got a good realtor that can give you good advice and a good loan officer, because there's things like ARMs. ARMs are, what is an ARM? It's an adjustable rate mortgage, which allows you maybe the first year or two to have a lower interest rate, so a lower payment. The Feds, all the analysts we're talking to all say that rates will probably go down, level out, and stay about 5.5 this year, and they may even go down the next couple of years. And so with an ARM, the adjustable rate mortgage, you're starting at a lower rate, but you are looking at the potential of being able to refinance in a year or two and getting a fixed rate. So first thing you can do is work on having great credit rating so that you get the best rate that's available. Number 2 is look at maybe an adjustable rate mortgage. The third thing you can do very creatively is perhaps look at buying down your rate. So usually an origination point or buying down your rate is a 1%, which on a $2,000 or $200,000 mortgage is about $2,000. Those points you pay, and that's what's called a point, to lower your rate is actually tax deductible. So that may be a good option. Or if you really feel like you want to, maybe make a higher offer on something, you can always ask the seller maybe to pay not just closing costs, but maybe some closing costs that might get you some points in there to buy down your rate. A lot of creative ways to buy. Yes, Mr. Buyer, it's still a great time to buy. House prices aren't going to go down. Rates may go down, so your payment may adjust, and there's ways to make it affordable today so you can get the house of your dreams. So if you're looking to buy, now's the time to do it. Don't sit on the fence and don't wait. Any questions? Reach out to the Graves Group. We're always here to help you.